Although threats of a limited supply and energy shortages persist, a rise in oil prices has been replaced by this slide. Well, data from the US Energy Department confirmed a drop in the crude stockpiles. Moreover, figures turned out to be much worse than those released by the American Petroleum Institute the day before. US crude oil inventories plunged by 12.5 million barrels in the week, while analysts expected an 800,000 barrels rise. US gasoline stockpiles by 2.1 million barrels. However, given that the market had already priced in the fact of a large unexpected drawdown in inventories, the new data did not hit to higher oil prices. Nevertheless, the prospect of a rise up to $80 is becoming increasingly likely. This level seems to be a short-term target, and Brent crude has consolidated about $77.5 for the first time in more than 2.5 weeks. This indicates that its sideways move is over. If the optimistic mood persists, the quote will most likely return above the $80 mark. Gold appears to have finally settled in a range limited by the levels of $1,960 and $1,980 per ounce. Having reached the upper boundary, the quote instantly fell to the lower one and started trading sideways. The downtrend remains intact, but a strong sell signal will be generated only after the price fixes below the 1,950 mark, at least on the 4-hour chart. Until then, there remains a possibility of a price bounce. Gold traders are closely watching the ongoing standoff over the US government debt ceiling and possible interest rate hikes, especially by the US Central Bank. The minutes from the Fed's last meeting showed that some officials saw the need for more rate increases, while others expected a slowdown to eliminate the need for further policy tightening. Although yesterday's data revealed that the UK inflation beat estimates in April, reinforcing fears that the regulator could deliver additional interest rate hikes. Furthermore, the European Central Bank is also expected to keep lifting rates this year. Meanwhile, the Russian currency continues to trade at around 80 rubles per dollar. However, volatility somewhat increased on Wednesday, with the ruble posting modest gains. This largely reflects market sentiment, so if there are no new driving forces in the near future, the quotes will most likely shift to the range of 79 to 80 rubles per dollar early next week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.